Anthony Grasso here, bringing you financial news that you can use. In this particular video, I'm going to do a stock analysis on Nvidia. Now, this is beaten down semiconductor technology company worth investing in right now with the recession looming. Well, let's find out together. What I'm going to do is I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and I'm going to give it my thoughts and my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell for like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. As always, folks, this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. All right, so if you don't know what NVIDIA does, NVIDIA Corporation provides graphics, compute and networking solutions in the United States, Taiwan, China, and internationally. The company's graphics segment offers the GeForce GPUs for gaming and PCs, and the GeForce Now game streaming service, and related infrastructure and solutions for gaming platforms. Now, the Quadro NVIDIA RTX GPUs are enterprise workstation graphics, and the GPU software for cloud-based visual and virtual computing, automotive platforms for infotainment systems, and Omniverse software for building 3D designs and virtual worlds. Its compute and networking segment provides data center platforms and systems for artificial intelligence, HPC, and accelerated computing. The Mellanox networking and interconnect solutions, automotive artificial intelligence cockpit, autonomous driving development agreements, and autonomous vehicle solutions. It does cryptocurrency mining processors, Jetson for robotics and other embedded platforms, and NVIDIA and artificial intelligence enterprise and other software. Now, the company's products are used in the gaming, professional visualization, data centers, automotive markets. Now, NVIDIA Corporation sells its products to original equipment manufacturers, original device manufacturers, system builders, add-in board manufacturers, retailers and distributors, independent software vendors, internet and cloud service providers, and automotive manufacturers and tier 1 automotive suppliers, mapping companies, startups, and other ecosystem participants. It started a strategic collaboration with Kroger company, and it was incorporated in 1993 and is headquartered in Santa Clara, California. So let's look at some of the biggest news that came out on NVIDIA over the past day. Now, the second quarter results came in and they were weaker. It was disappointing guidance from its second quarter earnings report. Now, analysts are still bullish regarding this company in the long term, saying it is showing signs of a potential bottom. Now, I think a bottom is coming, and the gaming sector has been the biggest driver of the decline right now. The macroeconomic conditions over the past year have played a huge role in this recession we're going into. By the way, I will get into my thoughts of this and later on in the video. But for right now, let's go ahead and look at some of the fundamentals of the company right now. So the stock is currently trading $176.02 a share right now. It dipped down about 5% in the after hours trading last night, but it's definitely come up from its lows. Now, it has a market capitalization of roughly $429 billion. Now, the company is projected to have around $29.23 billion of revenue for 2022, which is flat from the 2021 revenue of $29.5 billion. Now, the earnings are projected to be around $5.6 billion at the end of this year of 2022, which is the decrease from the 2021 numbers of $9.45 billion. Now, the revenues are projected to stay flat over the next year and then increase to around $40 billion by the end of 2024. So basically, these projections are saying, well, the company is going to stay flat for a couple quarters into 2023. And then hopefully at the end of the recession, we can just see a positive incline. And it should have positive earnings in the end of 2024 of roughly around $12.9 billion. So basically, it's projected to have slow growth into 2023 and then shoot back up in 2024. All right, so let's go ahead and look at some of the key measures of this company right now. Well, if we look at the valuation analysis, because Nvidia is in the semiconductors and semiconductor equipment industry and has positive earnings, The price to earnings growth and the price to earnings ratios are the most appropriate valuation measures. The price to book ratio is excluded since it underestimates the company's book value by overlooking hidden assets such as intellectual property. Now, the price to sales ratio is not as meaningful as the PE or the PEG ratio due to the company's positive earnings. Therefore, Nvidia seems expensive with a price to earnings growth ratio of 2.15 times, which is above the industry average of 1.88 times. All through, their price to earnings ratio is 45.6 times. That is among the highest in the industry, and it's always really been trading at above valuation. And the semiconductor industry average is only 19.1 times. So 45 times, 19 times for the industry. So yeah, it's definitely trading above valuation. Now, the price to earnings ratio versus the fair ratio, this is the expected price to earnings ratio taking into account the company's forecasted earnings growth, profit margins, and other risk factors. It seems like a good value based on that because its fair price to earnings ratio, I put at 49.7 times, and it's trading at 45.6 times right now. Now, if we look at the share price versus the fair value when looking at future cash flows, we're going to use the discounted cash flow model for this analysis. It's currently trading below the estimate of fair value. I put the fair value around $187 a share. Now, if we look at the profitability numbers of the company, based on its gross margin, operating margin, and net margin, the company converts a larger percentage of its revenues to profits than most of the companies in the industry. Now, furthermore, the company is profitable with an operating margin of 32%. Now, the current net profit margin of 32% is higher than last year. Last year was only 27.6%. Now, if we look at the small dividend that they pay, it pays an annual dividend of only $16 cents a share. I wish it was $16, which is the current stock price produces a yield of 0.09%. This is below both the industry average and the S&P 500's average of 2.85% and 1.93% for the S&P 500. However, few other companies in the semiconductor industry even pay a dividend. And it's not a notable dividend. So if you're worried about dividend investing, this is not a dividend investing company to hold. Now, looking at the growth of this company, well, the earnings growth at Nvidia outpaced revenue growth over the trailing 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate. However, this result was better than that of the average company in the semiconductors industry. Now, the earnings trend, though, the earnings have grown significantly by 25.8% per year over the past 5 years, historically speaking, and it does have accelerated growth. Their earnings over the past year have grown 77.9%, which exceeds its 5-year average of 25.8%. Now, they say that the earnings are expected to grow significantly over the next 3 years. But what I'm saying is it's going to stay flat and the earnings are going to decrease into 2023, but then it's going to be significant in year 2 and 3. So at the middle 2023, 2024. All right, so let's look at the financial strength of this company. It holds a substantial amount of cash and cash equivalents on its balance sheet. These liquid assets can be used to fuel growth, pay dividends, and limit its financial risk. Now, the short-term assets of $29.6 billion exceed both its short-term liabilities of $5.6 billion and its long-term liabilities of $19.3 billion. Now, it has more cash than total debt, but its debt to total capital ratio has increased from 35.9% to 41.6% over the past years. They've been basically reinvesting their money. Now, the debt coverage, their debt is well covered by operating cash flows of 81.9%. And the interest coverage, the interest payments on its debt are well covered by earnings before interest and taxes of 53.8 times. But it is important to note that insiders have only sold shares over the past 3 to 6 months. And I feel that if you were in this company at the start of 2022, this would have been the company to get out of going into a recession and a declining forecast and decline in the market. This is why you have to maintain a look at your investments on a consistent basis. So you just have to predict, okay, well, the macroeconomic conditions are worsening. Well, what companies are going to, hurt? This is one of the companies that got hurt during the macroeconomic downturn. Now let's look at what do the analysts say specifically regarding Nvidia. Now, the current consensus is a buy recommendation. Now, 53% say buy and 25% say strong buy, with only 19% saying hold. Now, the average price target that they put on this company over the next 12 months is $224 a share, with a high estimate of 400 and a low estimate of 130. I do think that's pretty high for the average, but I will get into my reasons why later on in the video. Now, going over a few of the analyst reports that I found really quickly. The Street Quant Ratings has a buy recommendation on Nvidia. That is driven by the number of strengths, which they believe should have a greater impact than the weaknesses, and should give investors a better performance opportunity than most of the stocks that they cover. Now, the company's strengths can be seen in multiple of areas, such as its robust revenue growth, solid financial position with reasonable debt levels by most measures, expanding gross profit margins, and notable return on equity. They feel the strengths outweigh the fact that the company has subpar growth in net income. And the Forward Equity Research report, they have a hold recommendation on this company. The Forward Equity Research team projects that Nvidia will perform in line with the market over the next 6 to 12 months. The projection is based on their analysis of the three basic factors that influence common stock performance. They look at earnings strength, relative valuation, and recent stock price movement. I agree that it will perform in line with the market, because what the market does, based on this recession, the macroeconomic factors on play with consumers not buying certain things and the gaming sector declining, yes, it will perform in line with the market. And finally, let's look at the CFRA report. They have a buy recommendation, and that's they're optimistic surrounding the growth potential. Now, they see the data centers led by Nvidia's first Hopper-based GPU, built with the 80B transistors using the TSM's 4 nanometer technology, while its entry into CPUs with Grace will take place in in the year 2023. They see an inflection in auto revenue in the coming quarters, and note that its growing pipeline, 11 billion over 6 years, up from 8 billion figure a year ago, with the biggest opportunity coming from software, NVIDIA Drive, greater content per vehicle than hardware. Within software, they see a key opportunities attached to NVIDIA's artificial intelligence enterprise software, as well as for its Omniverse enterprise platform, which should support a more recurring based and higher margin business model. So basically what CFRA is basically looking at is they're saying, well, the gaming GPUs are slagging, but there's other opportunities that Nvidia is going that's going to accelerate the growth and offset the gaming sector declines. So let me bring it over here. So am I a buy, hold, or sell recommendation on Nvidia? First, let me get in my thoughts regarding this company. Now, Nvidia reported, and we're going to go over the second quarter report right now, and then I'll get into a few things. Now, they reported second quarter results that just came out that are consistent with its preliminary results that they announced over a couple weeks ago, with revenues of 6.7 billion, well below the original guidance that they gave out. They really originally gave out 8.1 billion guidance. Now, the weakness in the gaming sector was the primary driver of the shortfall. That segment was down 44% and then 33% year over year to $2 billion. Now, it's been anticipated for a slowdown in the gaming segment following the crash in the cryptocurrency prices and the associated mining demand, as well as weaker macroeconomic conditions, like I was saying. Shares fell initially 5% in the after hours trading last night, but then actually got up a little bit better as the day progressed, which can be attributed to the weak guidance, as gaming revenue is likely to be depressed for the next couple more quarters. That's in line with what I've been saying. They're going to be stagnated over the next 2 to 3 quarters. Now, second quarter sales grew by 3%, but fell 19% overall to that $6.7 billion number. And what offset the gaming decline was the company's strength in data centers and automotive segments. The data centers grew about 61% year over year, led by stellar revenue that nearly doubled. Now, key drivers that supported this growth included the natural language processing, the deep recommendation engines, and autonomous vehicle fleet data process and training. Now, gross margins were 43.5%, down from 65.5% in the first quarter due to the 1.34 billion charge on inventory reserves. Now, management does expect the third quarter sales to be a midpoint at 5.9 billion, which implies a year-over-year decline of around 17%. Now, there should be growth in the data center and automotive segments that is expected to be more than offset by declines in the gaming. Now, the explosion of the artificial intelligence and deep learning phenomena that rely on NVIDIA's graphics cards chips presents the firm with a potential massive growth opportunity, I believe. Now, the firm has been the first mover advantage in the autonomous driving market that could lead to widespread adoption of its Drive PX self-driving platform. Now, there is a barrier to entry for most potential rivals because of the increasingly complexity of the graphics processors, as it would be difficult to match NVIDIA's large research and development budget. They have a huge budget for research and development. So based on all of that, I am a buy recommendation on NVIDIA, and I put a 12-month price target of only $200 a share. But I do have a caveat though. Market volatility could create a more attractive entry point than the price of it as of today. But nonetheless, I think that long-term investors should begin to find this company very attractive. This is a long-term play. So if you buy into it, just look at the entry points. And if it dips again to below $170 a share, I would go ahead and buy it for the long term. And my projection is 3 to 5 years to get the most out of this company. Now, I think the firm's data center business will prove more resilient to macroeconomic challenges that we're facing right now. Now, with artificial intelligence and cloud investments likely to remain strong, I believe NVIDIA continues to boast and viable exposure to the secular trends among its peers. This reflects my view of superior growth prospects for GPUs in general. I can sum up it by saying NVIDIA has an outstanding track record with a high growth potential. Now, others might disagree with me, and if you do, please leave your comments down below. Now, let me go over the risk to my recommendation real quick. If there's weaker than anticipated graphics chip sales, there could be slower than expected traction for new offerings. There could be lower spending plans from data center customers and increased competition from other semiconductor peers. Now, the artificial intelligence opportunity remains promising and is not a foregone conclusion for NVIDIA's GPUs to dominate. I think they will, but that's a risk. NVIDIA's automotive endeavors face plenty of competition as well, as numerous chip makers are targeting the market right now. They're trying to break into it. A large portion of the sales came from the maturing PC industry via the PC gaming. But what are your thoughts? Please leave your comments down below. So there you have it, folks. As always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell for your daily stock and cryptocurrency reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.